Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. It has been an exciting week in the market, and we are so glad that you guys have joined us for the show. Yesterday was a face-ripping rally as we broke out of range. The S&P reclaiming the 200-day moving average, rallying 100 points intraday. Now the question is, do we pull back, or is this the start of a new leg higher? Right now, the S&P futures are down about 25 as we head into today's cash session. It's going to be an interesting one. We do have quad witching on the slate. Now let's introduce today's panel, starting with Money Mander. Money Mander, good morning to you.
Good morning. Happy Friday. No projections from me here. I think we're going to get some wild action here into quad witching.
Agreed. All right. Diamond Trades, good morning.
What's going on, guys? Penn State first tournament win in 20 years. This day is already a great. Yeah, I mean, we don't need anything else to happen. We've already won the day. Love to see it. Let's get after it today.
Not only was it a win, it was an absolute ass whooping. And Charles Barkley before the Charles Barkley before the start of the game said not only that Texas A&M would win, but that the game wouldn't be close. Charles Barkley, I know you're watching. Suck it, brother. All right.
Cooked.
Going on to Ramsay Rippers.
What's up, guys? Good morning. Happy St. Patrick's Day. Quad witching. Let's do it.
And Moe Mamba.
Good morning, Honda boys. Good morning. Quad witching day. We'll talk about that later on in the show. Let's get it.
All right. Let's dive into Fed forecast, economic calendar. What do we got?
Yep, let's go ahead and do it. Today, we don't really have much. The only thing that we have to watch out for is UMich consumer sentiment at 10 o'clock. So make sure to keep your eyes peeled for that. But let's go ahead and look ahead to next week's economic calendar. So nothing high impact on Tuesday. And then nothing high impact on Monday. Tuesday and Thursday, we're going to have housing data in the form of both existing and new home sales. And then that massive FOMC Wednesday, we have a massive rate hike decision in the wake of the banking sector instability while inflation remains persistent. We'll have to see what the Federal Reserve decides to do and what their forward guidance will be going forward for the federal funds rate into the second half of 2023 here. Let's go ahead and move over to markets. So markets rallied aggressive yesterday following the coalition of banks that stepped up to save the failing First Republic Bank. So a coalition of banks led by JP Morgan, Bank of America, Citigroup, and Wells Fargo deposited about $30 billion to prop up First Republic Bank. First Republic was heading for a similar liquidity issue as SVB, as money fled mid-sized regional banks for the perceived safety of too big to fail or large banks. So a lot of people were taking their money out of these regional banks, First Republic included, and moving them into your JP Morgans, your Citigroups, your Bank of Americas. And First Republic was in a situation where they had depositors leaving. They needed some money. They needed to raise cash. They needed to get that liquidity. They were thinking about doing raising some funds in the open market. And that's when investors got spooked. Very similar to SVB, stocks down 84% since the start of March. So obviously that was no longer an option. And it was actually a concern that First Republic would be the next one to sort of fall, right? The next domino, following SVB last Thursday, following SPNY on Sunday. But it does appear that some of the larger banks in the United States have stepped up to backstop this First Republic problem. Interestingly enough, First Republic, which did bounce solidly yesterday, is down again in pre-market. So we'll see if the market believes that this intervention will be all that is necessary, or if there will have to be some sort of additional step in, maybe even by federal authorities. We'll have to see there. Big banks also showed a support for Credit Suisse. So Credit Suisse was able to secure $50 billion from the Swiss National Bank, their own Federal Reserve, essentially in Switzerland. And so both of these things combined sort of set markets into an absolute tear yesterday. First, on the hope that, this whole financial system crisis won't spiral as out of control as we initially thought. And then secondly, on hopes that maybe, just maybe, we will see the Fed sing a dovish tune next week, as there is clearly some sort of instability in the financial sector. Maybe they won't want to be quite as aggressive on rate hikes. Maybe they'll even hint at stopping these rate hikes a little bit sooner than expected. And so that in my opinion is why you saw tech in particular really rip yesterday. That outperformance across the entire tech sector, Apple, Nvidia, AMD, all showing really, really nice gains yesterday. Microsoft as well. So we'll have to see if that continues. And then the last thing I want to talk about is that we had an increase to the Fed balance sheet as well. So we've been talking about quantitative tightening and how a lot of liquidity is supposed to be leaving the system as the Fed essentially pulls back the reins, right, and lets these assets roll off their balance sheet in the form of quantitative tightening. We've been talking about that. They started that in last April, essentially, right? So the Fed's balance sheet has been slowly trickling down as they've been trying to let some of the assets that they purchased during that whole COVID stimulus wave sort of roll off the balance sheet and get back to some sort of normalization. This week, when the Fed had to step in to save SVB, just in 1 week, they had to increase the balance sheet by $50 billion alone, wiping out basically 25% of the QT that they did. This does not necessarily mean that we have a return of quantitative easing, but I do think that it's just ironic that, we worked so hard over this past 12 months to, really tighten financial conditions, shrink the Fed balance sheet, raise rates, and then in one fell swoop in 1 week, 25% of that is essentially undone. And who knows if this entire crisis is over, right? We may need some additional intervention from the Fed. So it'll be interesting to see how that plays out going forward. Mander, what do you got?
You hit the nail on the head. The one thing I was going to say was I've been seeing all of this across the board of the balance sheet increasing, which it did, but this isn't quantitative easing is the one thing I wanted to harp on. This is more so a kick the can down the road, like collateralized loan here is all the Fed did, right? They basically stepped in and they said, you have these massive hold to maturity loan losses, unrealized losses. But if you're going to need liquidity, you're going to take massive losses on these hold to maturity portfolios. What we will do is step in and buy them back at par for you. So you're not taking the massive loss on the portfolio. And then what you're going to do is in 1 year, you're going to pay us back the loan at like a 4.75% rate. And that's really all they did is provide immediate liquidity on a loan. So this isn't like quantitative easing in a bailout. It's just an immediate liquidity providing for them. So we'll see. Really, all I think this does is give them the liquidity they need now. But then what happens in a year, right? If the Fed doesn't pull back rates, they still have these massive unrealized losses that eventually you're going to have to make up for. So even if they get this right at a 4.75% loan, how do these banks then make that up over the next year? I think this is kind of just another kick the can down the road, and then eventually maybe they kick it far enough to where rates are back at zero and these hold to maturity ports don't have the losses anymore. I don't really know, but let's look at what you harped on as well. In the meeting next week, I think all eyes should definitely be on the meeting. Here's what the Fed funds are pricing in right now. We currently have about an 80-20 in favor of continued 25 basis point hike. So 50 is now out the window after having an 80% probability just last Thursday. Now 80 is out the window, 20% actually in favor of a pause. But after the ECB came out with a 50 basis point hike just this week, it looks like the central banks and the Fed here are going to continue on their mission to curb inflation and get back to price stability. So it looks like 25 basis points is going to be the favorite here. I don't think either the Fed nor the ECB, neither wants to be the first one to have to stop rate hikes here. Neither one wants to show that, our financial system is not capable of handling these hikes, and we have to be the first one to pivot on our curve, our quest for inflation here. So that'll be the biggest thing. On top of that, we also have our quarterly projections by the Fed. So I think that'll be another big thing to watch on. Where do they see GDP going? Where do they see the new terminal rate going? Which was the big thing after we said Powell said they might go back to 50 basis points. The big thing was, 575 basis points is now getting priced in for the terminal rate. We'll see where they put that after the financial instability that got showed this week. And then unemployment as well. So a lot to come out of that meeting next week. And we'll really see what the Fed is seeing for the rest of the calendar year.
Yep. And look, it'll be the first time that he speaks publicly since going in front of Congress and saying that there's no systemic risk to the financial sector just hours before the collapse of the 19th largest bank in the nation. So that will also be interesting. That's going to wrap it up for us. We'll pass it back to Alejandro.
Awesome stuff, guys. Thank you. Let's jump right into the system. Yesterday, we got a textbook buy signal. It was a lot of fun trading long yesterday. I traded Tesla. That was my way of taking advantage of the rip higher. But let's talk about the technicals and let's talk about why we got this super strong push. Now, I'm going to be talking simply about the system, about the 30-minute and the hourly chart. Of course, there are other areas of confluence to use in your trading. But in looking at our two charts, the 30-minute chart, we got the break over the 50 SMA, and we finally got the bullish cross of the 10 SMA over the 50 SMA. Now, it's okay to have been a little bit skeptical on this move because we saw that previously in the week when the 50 SMA was still in a strong downtrend. We got the break over it, and bulls couldn't do anything. Yesterday, however, the 50 SMA was starting to flatten out, showing that there's a potential for trend change in the market. But also, what was most important is for the first time in a long time, the two charts started telling the same story. Okay. What does that mean? It means we got the break over the 50 SMA on the 1 hour chart as well, and it was off to the races. So if you didn't play the initial buy signal, you could have gotten in over the break of the previous resistance, which was around 39.35 SPX, which was also climbing over the 50 SMA on the 1 hour chart. And at the very least, you knew not to short into that move, because when the two charts are telling the same story and you get that change over the 50 SMA, that's when we get those super powerful moves. And that's exactly what happened. Now, coming into today, everybody needs to understand. First is quad witching, which in nature it makes things more difficult to trade, right? So I talked about how I'm not trading today on my Twitter, in the newsletter. The reason for that, this is hard enough, right, guys? When you know that the market is going to be more unpredictable than usual due to high amounts of volume, right? We see higher amounts of volume on quad witching day and higher amounts, therefore, higher amounts of volatility. It's just a good day for me to sit out. But there's also a lot of headline risk in this market. And there's a flip-flop of sentiment. If you've been watching the market every day and following closely, all of a sudden everybody's bullish again after being down at 3,800 when the banks when that entire debacle was starting to unfold and things were looking really ugly. So again, just trading the price action is going to be very, very important as we continue to move forward. But the bulls are going to stay in control as long as they're trading above the 50 SMA on the 1 hour chart. That's what I'm going to be watching for, to see if that 50 SMA can start to flatten out and start to put in an uptrend headed into next week. And we can look next week to continue to trade long. But again, the futures are selling off pretty hard here. Down about 30 points headed into the cash session. So we'll see what today has in store. It'll paint the picture for Monday, but that's going to do it for the system. And we'll pass it over to Ramsay Rippers now for Bet the Bell. Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Good morning. Let's get right into it, Ryan. Pull it up. Everyone's been trading, or should I say not trading, has been guessing very well lately. Another clean slate of dubs for the team on, what was it, Wednesday? It got close, though. It did get kind of close. That was a ripper intraday after the pretty strong sell in the morning. Got close. Diamond still in control. Nothing really changing. Mander slightly.
Absolute
behind.
heater going here. I think I'm ripping 9 straight.
Something like that. I'll check for you guys. We'll see what it is. But with that being said, we're going to take a look over at the indices here. Down just about 1%. Pretty strong dump since we have started this.
We are dumping right now.
Yeah, Beat the Bell episode. I think we were trading at like 392 when we started. We're basically right at 391 right now, down another point. Basically down 1%. What do we got today? Green or red, guys? Hondo.
I'm gonna go red. I mean, we're down almost 40 points, so go red.
Damn. That's I'm gonna go red. Quad witching is historically usually a red day. Yeah, red.
Diamond.
I'm going to go red more because of the chart than the pre-market action. We hit higher time frame resistance at these levels. So red.
And Mander.
I don't know why this keeps happening. We get these pre-market dumps every time we have beat the bell. But I'm going to say red as well. I think we grabbed enough liquidity yesterday. We see a little rollover today.
Yeah. It's kind of unfortunate. I hate these like moves in the pre-market. Save it for the intraday action, man. All right, Ryan, Microsoft. Let's see it. Guys, it's pretty simple. Next question. I want to know, is the bottom in on Microsoft? So off of those October lows, it's been a relatively strong name, really, really strong over the last this week, running like 15 points off of lows intraday yesterday. Higher low after higher low is what it's looking like. As of right now, we are trading higher again. We made another higher high in the pre-market and yesterday. Is the bottom in on Microsoft? What do we think, Alejandro?
Ooh, I was hoping you wouldn't come to me first. I wanted to hear some other people's opinions. So this is an interesting spot because you were asking us similar questions at the start of the year, and I was super bullish on a lot of these names, just saying greater chance for greater reward than potential downside risk, and I do think that thesis, I'm going to stick with that. So I'm going to say that the bottom is in, but that's not to say that I don't think that these names are going to start to really pull back. So I think we've seen the bulk of a lot of the rally in tech, and I think these names, contrary to what I'd like to see happen, I think that a lot of these names are going to start to pull back, but I do think that the bottom is in Microsoft.
Mo.
Man, that's gonna be a steep drop to call new lows on Microsoft. Fuck, that's tough, man.
That's what I'm saying. It's already like, it's probably gonna take a hit, but the bottom. I mean, it's got to be in, no?
No,
Famous
fuck it, man.
word.
No, it's not in. Fuck Microsoft. Fuck them all. That's it. It's not in.
I'll agree with Mo there. I'll agree with Mo. I get Alejandro's point. I get Alejandro's point that the bottom may be in. I mean, just more so. I'm in Mo's boat because I don't want to believe it's in. So I'm gonna go with Mo.
From all-time highs posted back in the fourth quarter of 2021 to the low of the range that we're trading in, these October lows of 2022, where we're trading out right now is basically the halfway point. So it's another interesting factor to state. Mander, thoughts?
Yeah, it looks like it would be from where we're currently trading at, like a 25% down draw to lows. I agree with Hondo's point in a lot of names, but Microsoft is not one in particular I think the bottom is in on. But I think Meta, I think Netflix, I think NVIDIA, there are definitely some ones where they had other crises that went on. Netflix got destroyed. Meta had the AR losses. NVIDIA had the China-Taiwan thing. I think the bottom's probably in on those names because they underperformed so extreme. But Microsoft, I think, probably sets new lows here.
Microsoft has AI, brother. You have no idea what you're talking about.
ChatGPT guessed wrong.
I don't think anyone else does either. You murmur AI and you go up.
They are locked and loaded with headlines. They have one ready for 250. They have one ready at 230. And then they're going to bring out the juggernaut AI headline at 220. There's no way that thing's making new lows.
All righty, we're going to get into our last question. As mentioned earlier, quad witching today. Volatility induced event. It's going to be crazy. It's going to be fun. Where do you guys think we close today on either SPX or SPY? And funny, SPY just bounced $1 as we asked the green or red question. What do we got? Where are we closing today, guys?
Oh man, and I almost like wanted to change my answer to green on the day. Just to all right. Come back to me. I got to look at the SPY chart. I haven't looked yet.
Mo, what do you got us closing at?
Dude, man, you know what? I'm gonna stick with the TA. I'm gonna change my answer. Go green. I'm gonna change my answer. Go green.
No.
Yeah, dude. I can. Hey, we're still on the
change
show.
your answer.
No, yeah, I can. I mean, the show. We're still on, bro.
Nah, that's not Ramsay. There's got to be somebody's got to set boundaries here.
Ramsay, tell them what's up.
Fucking Wild West.
Wait, why do you want to change your answer? What changed? What happened?
Dude, I have my TA as us bouncing today, making new highs, but this gap down scared. But then I looked at tech. God damn, tech is holding up. Like, it's crazy. Tech is so strong right now. So if tech starts to rip, SPY is easily going to rip to green, bro. I mean, not easily, but we're down a few points.
Listen, man, you're killing me. I've always wanted to do this in honor of the new beard. As I'm making my decision, give me a second.
No.
Declined. Can't do it. We got to stick to the
I like that.
All right.
We got to stick to the
hopefully it's
precedent,
for the
dude.
good, right? I mean, hopefully I get that point, huh?
Yeah,
All right.
Yeah,
what was the
morally
question?
green.
What were we
I get
talking
it,
about?
but for the sake of the show, your answer's locked in. Where are we closing today?
397. So it's a win-win, huh? Either we close in green and I win, or we close in red, I get that point. 397.
397. All right, so we're taking yesterday's highs. Diamond.
I'll go 394, 395. 395 sounds better. We're going to fill the gap and then reject and pull back a little bit. 395.
You're gonna introduce me here, dude.
Man,
You gotta call him out, bro.
Thanks. I'm gonna say I'm looking at the chart right now. I'm gonna say like 390.10. I think we get a bounce off of Wednesday's high at 389, but closed, right above 390.
Gotcha. And Hondo, back to you. What do we got?
I was gonna go. You said 390.
Yeah, 390.10.
I'll go 389.
Wow, Hondo's calling for the blood. All right, we'll come back to this on Monday. That does it for Bet the Bell. Take it over, Hondo.
All right, Moe Mamba market analysis.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, so this is what I was. Damn, we are down 5 points right now. That would be crazy if we close green. So what I was thinking is, you remember this level, guys, this 393.5 level. We had said if we come down through this, what was once a demand zone. So let's go ahead and highlight that. This was from about 3.5 points to 390, I think, somewhere right about there. So this was the zone I was looking at. I said if we had come through, I like a move down to 386. That's what we got, and then a bounce back to 393.5, and then a drop into 379. Then we held this level here. And then yesterday, absolute ripper into this trend line right here. We did reject this the trend line, not a strong rejection, right? A weak rejection, favoring the bulls a bit, but still a bearish close. I did think that we'd come over here, bounce off this level that we once rejected. We're opening within this demand, so that's why I'm thinking, we do come up and rip. Green is going to be tough. That is, quite a few points. Tech is really holding up here. Tech is definitely carrying the market. SPY just wants to puke, but Tech is carrying us for sure. So I do think we're going to bounce out of this demand. Quad witching is usually a red. Doesn't mean through, but quad witching historically, most of the days are red. So could we get a red close? Yeah, but I think more upside from here. I'll be surprised if we close below 390. I do think more upside, whether we get it today or come Monday. But I think we do end up moving up to this 399, 400 level and then coming down here. If we do get above this, we'll go about it then and there. But for now, I do think we hold this demand zone once again, and we make our move up to 399, 400 by Monday at least. That'll do it. Thanks, Hondo.
Guys, for this morning's episode of Beat the Bell, thank you everybody for joining us. It's been a really fun week. It's been a really fun week of trading. We hope that you all traded well. If you didn't, you either win or you learn. We'll be trading all day live today in the Kane Capital Discord. You can go to kane-capital.com to trade with us. Excited to get things going. And we'll see you guys back here on Monday at 8:30 a.m. Eastern Time. Go Penn State. Have a good one, everybody.